Hello, today is April 19th. I have a brief student loan update, but more importantly, I wanted to share about Fannie Mae, the regulators' release on allowing borrowers to use alternative credit scores or alternative credit data to qualify for a mortgage. So, the first news that I want to talk about, the update in the student loan world, is the Supreme Court actually ruled in favor of borrowers. I know the big $10,000 to $20,000 of forgiveness, the blanket forgiveness, had been hotly debated by the Supreme Court justices, but Cardona versus Sweet, the bar defense case, the justices actually ruled in favor of the borrowers, allowing the federal government to continue with the forgiveness in the bar defense case. The argument for the for-profit colleges, the cases for-profit colleges say, hey, forgiving debt through bar defense through defrauding borrowers will ruin our reputation. And also they basically filed a lawsuit saying that the Department of Ed doesn't have standing to forgive debt from their institutions, that they don't have the standing in the Higher Education Act to forgive that debt. The justices ruled in favor of the Biden administration and the borrowers, allowing the administration to forgive debt for the borrowers that are filing bar defense claims. It's over 100 mostly for-profit schools and institutions on this list, stating that they were falsely advertised the advantages of the program, including they were lied to about job prospects post-graduation. They were lied about various things, the curriculum. And the application for bar defense is quite lengthy. We do help borrowers with them. It's quite lengthy. You have to have evidence of some sort. Not that the evidence is really hard to gather, but you need to have some evidence in the documentation to file. We can help people. The great thing about bar defense is it will forgive the debt if you qualify up to a certain amount. I'm not going to get into all those details in this video. All I'm trying to get at right now is that there's good news with this bar defense claim being supported by the Supreme Court, because it shines light that they're like towards a pathway there might be for the $10,000 to $20,000 of forgiveness. The Biden administration used the HEROES Act to justify their ability to forgive $10,000 to $20,000 of student loans. They did not use the Higher Education Act to give their authority towards forgiveness. So perhaps and the HEROES Act has to do with like the state of emergency, right? That there's things that the administration can do in a state of emergency. Perhaps not winning on the HEROES Act, but perhaps now winning on the Higher Education Act, the Supreme Court justices might see that they have the authority in the Higher Education Act to forgive the debt. So that might be another pathway that Miguel Cardona can use the Secretary of Education to justify the blanket forgiveness. That's the point I wanted to make. We'll see if the administration is willing to go to bat for that and to bring that up. And we'll know more once the Supreme Court rules on this first case, which should be sometime in June, estimated. Now, let me go into alternative credit. The reason I'm doing this weird screen share is I'm going to reduce the size of my face so we can go into Fannie Mae's seller guide a little here, because I want to talk about non-traditional credit sources that lenders are now going to be able to collect on borrowers who do not have traditional credit built. For example, service agreements are not traditionally on credit, like your T-Mobile bill, right? Or anything that's a service, like if you pay your child's daycare, that's a service. That's not going to be reported on your credit. Rent is not reported traditionally on the credit. A lot of borrowers pay rent, right? So Fannie, on their seller guide, is going to allow non-traditional credit history, including rental housing payments, including utilities, medical insurance coverage, automobile insurance payments, cell phone payments, life insurance policy payments. They exclude payroll deduction, payments for household on renter's insurance, payments to local stores, rental payments for durable goods, automobiles, payments to medical bills, childcare, and school tuition. These are what's included. I wanted to highlight here. And as long as the payments are withdrawn from checking, savings account, voluntary payments made to payroll, savings plans, or contribution to stock purchase plans, providing a record that reflects at least 12 months of payments, okay? And they must be made no less than quarterly. So if there's 12 payments being made in at least four different items here, four different non-traditional items, that can qualify a borrower to build their non-traditional credit source. Let me click here and see what else it says. So you have to have, like I mentioned, right before I clicked here, 4 credit references for each borrower without a credit score, 3 credit references for borrowers with a credit score. So if you already have a credit score, then you only need 3 credit references. If there's a borrower on a loan without a credit score who cannot document any non-traditional references, the transaction is still eligible provided no more than 30% of the qualifying income for the loan comes from that borrower. So there's very interesting news coming up in light. And of course, it's a manual underwriting process, which is more work for lenders. But nonetheless, it's a really important development for those who tend to make cash payments or not get into debt. I was always perplexed by, in order to get debt, you have to show that you can pay debt. And it's like, well, what if you've traditionally not lived on tons of debt, right? Of course, we deal with student loans. So people with student loans, the good news is if you make on-time payments, that will help boost your credit score and therefore help build traditional credit. But then, of course, if you're a renter, there's tons of non-traditional credit that people are using. And I'm really, really happy now that Fannie Mae Seller Guide is going to allow for alternative credit scores for borrowers very soon in the near future. It's I believe the release date is May, or maybe it could start now, but what I heard was May. So again, super exciting development. This announcement came out February 1st of 2023, not too long ago. I've talked about it a little bit, but I just wanted to share. I will link to this seller's, oh, by the way, I'm sorry. I didn't differentiate between loans other than home ready loans and home ready loans, but I will link to the seller guides in the description of this video. If you like this content, please consider subscribing to the channel, liking, and of course, sharing. We're on standby. I release videos every single week that helps student loan borrowers, mortgage loan officers who want to qualify more student loan borrowers. If you're within that audience, I make content a lot around student loans, mortgage, topics that impact first-time buyers, and of course, financial literacy and financial education topics in general. A really popular video I did recently was on medical collections and how it impacts credit. But if you put a request to me in the comments, I read the comments and I will make videos that are requested. So please don't feel shy to comment. And until next time.